How have you thought about this? Because I think it promises to be the next 4 years of fair degree of volatility, fair degree of social media posts, which may be at loggerheads with what people might believe will be a normal course or par for the course business policy, and therefore there will be reactions for sure. How does one design an adequately steady mutual fund portfolio in the Trump era?
As you rightly said, X will get a lot of attention every day now because Trump is known to announce decisions on Twitter before anything else. So I guess most market participants will constantly be looking for his comments. And I think it will be a very noisy regime for the next many years. And obviously, we can't build portfolios around noise. It's too early to say what will be the implications of what he has said, whether it is just rhetoric and posturing or whether it will truly play out. I think generally the thesis for the last many months has been that the world will see, higher tariffs and some sort of deglobalization, which in itself could have challenges in terms of overall growth. In the last 20, 30 years, we have all been beneficiaries of an integrated world and global marketplaces available to best companies of the world. So if you're a great company, you can, sell into any country without these barriers. Now, I think the language that US is talking, if it were to apply that, and other dominant countries were to match that rhetoric by counter actions, we will see increased volatility, and it'll be very difficult to create long-term forecasts. And which is why, I have personally always felt that never extrapolate good news too far into the future and overpay for that good news, because the intermittent uncertainty will create significant volatility of prices in various asset classes, not just Indian equities, but any sort of equity or any sort of even bonds for that matter will have significant volatility. Currencies will have volatility. So I think a good portfolio will be built on pillars of sensible diversification and overweighting that asset class where cash flows are discounted at sensible valuation. I think that is the simple framework which generally has stood the test of time, decades before today's conversation and maybe decades after today's conversation also. So I think sticking to that core principle is how I would build a globally diversified portfolio across equities, stocks, bonds, and some bit of precious metals.